Hello everyone, welcome back to the channel. Today we are going to talk about three things: Bitcoin chart, Elrond chart, and the coming market crash. Because yes, I have a plan for that and I'm going to share it with you, because maybe some of you are not aware what this money printing will cause this year. Because believe it or not, we don't see the effect yet, but we will see it towards the end of the year. Stay with me. So before we start, the usual, use a VPN to be safer if you want to get in contact with me, or you just want to follow the heated conversation I have with people like yesterday in the evening. Follow me on Discord and Twitter. The heated conversation was on Twitter. It was about why Barclays shouldn't stick their nose where I spend my money, which I earn by working. Feel free to sign up and follow. And I recommend you signing up on Twitter anyways, because a lot of crypto conversations are going on there. But now let's just move forward. This is the Bitcoin chart. And as you can see, I put here this symmetrical triangle because for me it does seem kind of a symmetrical triangle. We are bumping back and forth kinda, and we have two price targets. One of the price targets is 46,000. The other one is 24,000. And why are these interesting? They are not as random as you would think. Because if we go to the Bitcoin CME chart, we can see that we have one CME gap at 47,000, 48,000, and we have another CME gap at around 24,000. And if you would go to the 24,500, which is the symmetrical triangle's price target, we would close the gap. The gap is this yellow rectangle. So however we don't like trading analysis, I'm not a fan either, sometimes it makes sense. And we need to bear in mind that trading analysis is based on the sentiment of the market, a sentiment of the people. They are watching the support and resistance, and sometimes you can trade it. That is the same with Elrond, because if I go to Elrond right now, as you can see, Elrond's price is using the 200-day moving average as support. So should we use indicators? Yes. Should we only use the indicators? I think not. Many trading analyzers are using only the indicators. I think with crypto it's not very exclusive, because yeah, we have a lot of FUD, we have a lot of news, we need to react on that as well. But in peacetime, like this is right now, when no one is attacking Bitcoin, indicators could give us some kind of a baseline where to buy and where to sell. The next thing I wanted to talk about is the market crash which is coming. And the reason I'm thinking that it's coming and it's gonna be here is this. Central banks are buying up gold. So why would they buy gold? I tell you why. Because they printed out a lot of money. The money until now was with the people. So they were holding, they were holders. But now the restrictions are starting to be lifted. People will go out to the pubs, to holidays, they will start to spend money on clothes, they go back to work, they need clothes, they will start to buy more petrol, that's why the petrol's price is also rising. They will start to pay for car repairs, they will start to spend the money. But it's not the money which they, let's say, earned, which they usually earn each month. No, it's the surplus of printed money which was given to them. And until now, even though we already seen bigger inflation that we should have comparing to last year's, now this money, this big volume of money, of stimulus checks, social help, or just credit card helps, which are not coming from the market, they are just printed out of thin air, that will pour into the market. Many people think that this market crash or crisis will be the same as in the pandemic. And I don't think so. I think it's going to be different. The reason is that when the pandemic hit, consumptions stopped, everything stopped, people did not buy, and the economics engine is the consumption, but nobody consumed. Everybody was watching Netflix and they chilled in the house. Therefore, we had this big fall at everything. People didn't buy anything because they knew that they are gonna lose their job. They are gonna have to pay rent because that doesn't stop. They will still have to pay the mortgage because that doesn't stop either, maybe for just a couple months, like 3. So everything's price fell. It came back. As you can see, the candlestick is the gold. Blue line is the silver, and the orange line, that's the S&P 500. Now what's the problem for me? My problem here is that the S&P 500 is at all-time high. Okay? The gold and silver, they are also pushing it. Okay, let's say they are pushing it. But the S&P 500 recovered, and not only recovered, it went way above. From the pandemic's bottom, or the dip, it went 88%. Now maybe you think that 88% is not that big because with Bitcoin we had 9x. For S&P 500, 88% in 1 year, it's huge. If we want to check 1 year, this is like, let's see, March until 17th of March, that's 21%. So we could say that this is all because it had to recover, and we would be right. Now how this time the crisis will be different? This time people have money, but the money's value is diluted. Therefore, I'm expecting everything else's price to go up. Because as we know, when there is an inflation, it's not the service and the product's value goes up, it's the money's value goes down. So how can you protect yourself? For example, you can buy assets. And I know that everybody is yelling crypto right now, but crypto right now, it's not mature enough to cooperate with it. We don't know right now, at this point, we don't know how crypto is behaving in a market crisis. Because maybe many of the retail, many of the people who have crypto, they will have to sell it to pay the bills, to pay the groceries, or just to pay anything else for the day-to-day life. Because yes, everybody's saying only invest what you can afford to lose. But we just have to take in consideration that a lot of people are investing also the money which they might need in the next couple of months because they want to get rich fast. Now what I'm gonna do? I'm gonna buy precious metals ETF, gold, silver, platinum, these kind of things. And I'm staying and watching. Now if I lose 1 or 2%, I take the risk and I take the loss. If it goes up, then I will obviously sell it, because what happens when gold, silver and precious metals price go up? Mining intensifies. It's not Bitcoin, it's not finite, it's infinite. They start to mine as much as they can and they will dump it on the market, and that will cause a downward trend in the price. In the meantime, due to the money's value dropping, it could happen that the indexes, the company's stocks value will also drop. Now I don't know if this is going to be true or not, but if it is, this is my plan. I buy the precious metals now. I wait for it to see what is happening, if it is going up or down. If it goes up, I will take out the money, not the profit. I will sell everything to have in fiat money, because if it goes up, let's say 5 or 10%, that will be the surplus of my money, which will have the value, the whole value after the inflation, which it had before. Okay, this is how we can measure. In the meantime, if the S&P 500 crashes, drops 30%, 25%, I will buy on that money indexes, and I will simply wait for it to recover. Therefore, I will put a plus 30, 40% on my capital. So let me know in the comments what you think about this plan. Are you aware, or do you consider a market crisis is on the way? And yeah, subscribe to the channel and like it if you like the content, obviously. And if you made it until now, if you watched the full video, well, thank you for that. See you tomorrow.